Good morning, Samina. I think clearly, markets today are going to react to a lot of news, specifically, on the GDP data number plus the GST numbers and obviously the auto numbers. But coming to the point that whether December will be better than November, I think clearly, markets seem to have bottomed out. I don't think any incremental panic is going to happen. But yes, I think the bigger trigger for the market would obviously be how soon the FI outflow, reverses. And I think December is a month where all of us would agree that post 15th or 20th of December, volumes normally go a little lower. Most of the FIs are out for vacation, so I think it's going to be a very lackluster month. My sense is that the near term, I think trigger would be the RBI policy. I think clearly the market should be awaiting the commentary. Although the call, according to most market observers, is that this will be a neutral call from the governor this time. But clearly, any commentary about cutting interest rates, I think that would be noted. Yeah, good morning, Neeraj. I think M&M definitely deserves to be looked in because I think clearly the kind of EV launch which they have planned, and I think the recent product launches in the EV basket are definitely very promising. My sense is that once the numbers come out, you probably see some more commentary from the management. But I think M&M, probably looks to be quite, solid and attractive even at the current odd levels. We look at a fair value of at least 33, 3,400 in the next, say, 6 to 12 months. And most importantly, it's been a stable performer all throughout. As far as the auto numbers are concerned, I think Maruti and TVS have shown positive kind of gains. But if you look at Hero Motor, I think the numbers were slightly disappointing. My sense is that in the passenger car segment there could be a lull, but because December in any way now in the coming month is a month where most of the buyers avoid buying cars in this month, but January again there would be a pickup. So broadly, I think Mahindra and Mahindra looks to be quite interesting. Plus, from the agri kind of product portfolio, I would believe that they have a very strong tractor kind of portfolio from the farm equipment side, which I think also is slowly picking up. With a good monsoon, Neeraj, I think you could see better numbers coming in from that product basket, which is extremely accretive in terms of EBITDA margins. So I think Mahindra and Mahindra, definitely can be purchased. I mean, if the market is slightly flattish today, and probably the stock corrects marginally, I think you could get a chance to accumulate this. But I think clearly Maruti and TVS Motors look to be fairly valued. No, I think this is a big kind of a sentimental booster for the stock, and I think despite the fact that valuations are not cheap, I think the bigger opportunity is very clear that more and more outsourcing will happen, and I think companies will have which are well positioned in this space are going to benefit significantly. I think from a 2 year perspective, Dixon seems to be a very solid story, despite the fact that it's not a cheap kind of stock. Our sense is that whoever wants to make a decent alpha or a decent gain here has to give in some more time because order wins are good, execution has been also been pretty solid. I think for all this to get reflected into numbers, I think it would take some time. But yes, the tailwinds are definitely very strong. So I think I won't be surprised, Neeraj, that today the stock would open on a stronger note. And I think this upside would continue because markets are definitely elated that this order boost is going to obviously definitely boost up earnings in a good way. So I think net a positive kind of bias, but I would still suggest one should look at these kind of stocks on any correction or any market kind of decline. I think from the large cap basket, as I mentioned, we are positive on Mahindra and Mahindra, but from the mid cap space, from the cement sector, we like Heidelberg Cement. I think the cement sector, I sense, is going to see a good consolidation and an up move in the next 6 to 8 months, and pricing gains are going to come in. From what our ground level, research says, I think cement prices could be hiked by about at least 8 to 10 rupees in the month of say mid-December to January, and that I think is going to be a major booster. I think supply side constraints are also going to benefit the company. So Heidelberg Cement, which is an MNC cement player, I think should benefit. We are looking at a target price of at least 260 to 265 years. So I think cement could be a interesting bet considering that from January I think market should start discounting what is going to come in the budget. And the last quarter for Heidelberg Cement could be increasingly very robust and very promising from the earnings perspective. So I think from the large cap M&M on any decline should be used as an opportunity to buy in. And obviously Heidelberg Cement, one can look at the next 6 to 12 months as a kind of a time frame to get this kind of fair value. I think clearly this space is, having a lot of excitement, and I think numbers from most of the companies have come out quite encouraging. So, we are positive on Radico, Khaitan, United, Spirits, and I would sense that, allied blenders, the bigger issue is what is the kind of product innovation and the kind of new product launches which they are planning. But this space is definitely interesting, Neeraj. I would not be surprised that the next financial year, one could look at a better profitability kind of trajectory for most of the larger players because consumption has been growing both in terms of volumes and obviously margins are going to take a much better positive uptick for FY 25-26. So I think an interesting space. I think from a long-term perspective, one should definitely be invested here.